Welcome back. You're still with us on Markets Today. Let's go straight to the rest of the headlines that we're tracking for you now. The fourth headline today, IGL and MGL slipped after the government deferred the APM price revision. In fact, there was quite a bit of a slide that we saw. MGL was down almost 6.5% by the end of trade. Surbhi is here to get you up to speed of what brokerages have made of the stock.
Thanks for that. So IGL and MGL is in focus today. That is because the government has kept the domestic APM gas price unchanged at $8.57 per MMBTU till further order. Now, the expectation was that the KPIT Technologies committee recommendations would be accepted by April 1st, which would have led to a cut in a domestic APM prices to $6.50 per MMBTU. KPIT Technologies told CNBC-TV18 that he expects the recommendations to be accepted soon. Citi says while the continued delay could create a near-term overhang for the CGD stocks, the pause in prices on a provisional basis suggests that the cabinet approval of the recommendation could be just a matter of time. Any modifications to these recommendations need to be monitored. They continue to view the stance on government towards CGD sector as favorable, and they prefer MGL and IGL. The top gas pick is GAIL, as that could also be a key beneficiary of a lower APM gas prices. Jeffrey say while the delay was unexpected, they expect the new price notification to be announced in the near future.
All right, speaking to CNBC-TV18, Gas Committee Chair KPIT Technologies said that he's hopeful of the cabinet clearing most of the panel's recommendations soon. He also added that the time frame for this remains unknown. Listen in.
I've heard from people that yes, the cabinet is considering it. It's likely to be approved, but when it will be is anybody's guess. We have said that by 1st January 2027, everything should be market determined. I'm quite hopeful that it will be accepted.
Okay, and here's to the fifth headline. A whole host of banks posted their quarterly business updates today. A strong update pushed CSB Bank higher, while a weaker one hurt Karnataka Bank. Abhishek Kothari is here with a wrap on both bank stocks' performance. Abhishek.
Well, to begin with, Karnataka Bank, negative surprise coming in from their loan book has shrunk quarter on quarter. So deposit momentum has remained healthy, but it's lower than what the industry level is, growing at 8.7% YOY and about 3.3% quarter on quarter. The loan growth not that surprised negatively, growing by just 6.2% YOY and a decline of 3.7% quarter on quarter. So the CASA or low-cost deposit mobilization has remained largely in line with what their deposit momentum has been, 8.7% growth YOY and about 6.7% quarter on quarter. So CASA ratio flat on a YOY basis, but it has improved on a sequential basis. CSB Bank, strong business momentum continued for second quarter in a row. The deposits are up 21.5% YOY and about 8% sequentially. The CASA is up 16% YOY, but about 10.7% sequentially. So the CASA ratio has improved on a sequential basis. Advances growth remained robust despite a strong Q3 that they had, up about 30.3% YOY and about 11.75% quarter on quarter. The gold loan portfolio continued to show strong performance, growing at almost 48% YOY and about 10.5% sequentially, while X of gold loan, the loan growth was at close to 13% quarter on quarter. So strong business momentum for CSB Bank. Back to you.
Okay, the other big mover on the downside today was KPIT Tech. It slipped 12% after JPMorgan initiated an underweight rating on the stock. Nimesh is standing by with all the details. Nimesh, what went wrong?
JPMorgan is seeing two big catalysts, or derating catalysts for KPIT, and that's why they've initiated coverage in the stock with an underweight rating and a target price of 520. JPMorgan is the lowest on the street in terms of target price on KPIT. Now, the two key catalysts are the derating catalysts, so to speak. One, they believe that the growth is likely to slow down beyond FY24 to less than 20%, and the scarcity premium with the IPO of Tata Technologies is now going to go away. So that's the first key reason. The second reason is they see challenges in terms of growth, and KPIT needs to win orders every year to maintain a growth above 20%, and that's going to be a key challenge because auto is a cyclical industry, and it's very difficult to give that kind of benefit of doubt to KPIT, given that it's trading at a 50 times valuation in terms of FY24 earnings. So that's the other key reason why they see a derating catalyst for KPIT Technologies. Now, as I said, it's an anti-consensus view coming in from JPMorgan, and hence the stock is reacted 5% in today's trade. I was looking at the brokerage recommendations. There are 10 brokers who are recommending a buy. One as a whole, and only 3 brokerages have a sell recommendation on KPIT Technologies. And I just said, KPIT with JPMorgan's note today of 520 target price, that's the lowest in the street as far as KPIT is concerned. The buy recommendations have an average target price between 750 to 1050, so that's the wide range. But the stock is reacting today largely on the back of an anti-consensus note from JPM, where they believe there are challenges for KPIT, and hence an underweight rating and a target price of 520, a potential 40% downside from current levels.
All right. The other stock in focus was GMR Infra. It gained 7% today after analysts turned positive on the stock following news flow that came through. In case you're wondering what it was, Vivek is here with more details. Vivek.
Well, that's right. So GMR Infra is the stock, it's been buzzing off late. Stock's been doing quite well. So quite a bit of news flow, especially towards the end of FY23 as far as the company is concerned. Significant fundraising as well as group simplification is something that is aiding or unlocking value as per what, Kotak Institutional Equities is saying. Now, first, having a look at the news flow itself, the company recently raised close to 2,900 crore via the FCCB route, and the conversion price for this particular, fundraise was at 43.67 rupees a share. Along with that, the company also said that it is looking to merge its subsidiary GMR Airports Limited with itself, which is the airport platform unlisted entity. So now GMR Airports Infra becomes the airports listed entity, and the group simplification works in a manner in which the shareholding comes to the GMR group at 33.7%. The group ADP from France holds around 32.3%, and the public shareholding, the remainder, is around 34%. Now, what is Kotak Institutional Equity saying? They're saying that number one, they have a buy rating on the stock with a target of close to 45 rupees. They're saying that GMR has now delivered on its promise of simplifying the group structure, and Group ADP will be bringing in close to 3,400 crore of investment into the consortium. So this particular simplification leads to access to lower cost capital, which they believe will lead to significant savings and also improved upstreaming of cash flows. So what they've done is they've retained the value of the existing airports and increased the fair value of the stock on higher value of the new airport wins that GMR is expected to get.
What about RVNL, Vivek? That stock surged in trade as well. The company has won multiple orders from Vande Bharat train set manufacturing and maintenance to an LOA for a highway project in Jharkhand as well. Tell us a little more about that.
Well, that's right. So RVNL actually is the stock in focus. What's actually happened over here is that the company has managed to bag and get onto its multiple orders in FY23. So if you take it, from March 30th onwards, the company has uploaded multiple notifications to the exchanges. On March 30th, remember the company which was earlier declared as the lowest bidder along with the Russian JV partner for the Vande Bharat trains, they've gone ahead and put that onto their book. So it's now part of the order book. This is for the Vande Bharat train set manufacturing, come the maintenance order. March 31st, the company along with its consortium partner got the letter of award for a highway project in Jharkhand, project cost of close to 1,272 crore. March 31st, another order win emerged as the lowest bidder for an expressway contract in West Bengal. Cost of the project is close to 721 crore. Remember, RVNL has consistently maintained that they expect to maintain their order book about the 1 lakh crore mark, and this is something that is playing out especially in the last week of FY23, where a lot of the order wins for a lot of the infrastructure players are getting booked.
Okay, sticking with brokerage commentary, PB Fintech lost 3% after CLSA downgraded the stock. Yash Jain is here with the details. Yash, over to you.
Well, it's a very interesting note which CLSA has written on PB Fintech. What they've done is they've downgraded the stock to outperform from buy earlier, but the target price has been raised higher to 710 rupees from 660 rupees earlier. The new target price gives you an upside potential of about 36%. What CLSA says is that the stock has rallied 60% in the last 5 months. That has been a result of two things. Company demonstrated a path to profitability, and the second one, pressure from selling shareholders has eased. Now, they also say on the qualitative side that lower burn rate in the new initiatives will aid faster break-even. Also, key value driver will be growth in the platform business. On the valuation side, they say that the framework factors in share of premium to increase to 4.6% and 8.4% by FY26 and FY40 from 2.1% currently, and they expect a 33% CAGR for insurance premium between FY23 to FY26. Importantly, CLSA observes that new initiatives for the company at this point of time is not a game changer, But one thing that they say should be tracked going forward should be the regulatory changes and the disruption which they get on the competitive front, especially on the side of Bima Sugam.
Okay, thanks a lot, Yash, for that. With that, it's a wrap on this edition of Markets Today. Have a great day. Thanks a lot for watching and good evening.